We're live, man. This one we just start out. Like we didn't talk anything before. We're just like, fuck it, let's go live. Let's do this. What's going on? As always, how are you doing?
To be honest, I'm tired because I'm cutting weights right now and
Not eating enough.
not eating enough. No, not eating enough carbs, man. Carbs are so important. And but I'm doing good. How are you?
I mean, it is what it is. Shit's been volatile and crazy all the time. Like, bro, if you looked at the semi shit, like at the semiconductor markets, all these stocks, we've had a few things here and there, but man, it's been so crazy. Yeah.
So you want to jump straight to markets, right?
Sounds good. Yeah, let's do it.
Because I wanted to ask, what's your opinion about the new AP collaboration with Swatch? Did you see it?
With Swatch, yeah, bro. But aren't they gonna be for like a few $100 only? Like when they do
Yeah, for $500.
why the fuck would they do it, man? It's
I
AP
think
making like a plastic watch for marketing, man.
I think the consumer is tapping out here the key shape of the economy, the key shaped economy.
Mm-hmm.
So the upper consumer is giving up here, maybe.
So now AP has to make watches for $500.
Yeah, bro, it's crazy. I'm not a buyer though. I'm not a buyer though. I won't buy it for $500. It's a plastic watch, so.
Yeah, I mean, like I looked at the watches, and those look like the shit some fake gurus would wear, like the most flashy or like not good looking, but flashy and most obnoxious watches you can imagine is the shit some fintech guru who tries to sell his fucking courses would wear.
Imagine these people ice them out now, like icing out some plastic watch. It's crazy.
Yeah.
Okay, T, how's your last week? How did it go for you? Like,
Well.
with
So, man, the last week was just fucking crazy shit on the semis, man. It was got cooked on that. Like at some point decided, all right, let's take out the hedge. Let's go balls deep, and it went against me. So it is what it is.
For people to understand, me and Torben, we went short Intel via bear call spread, the 110, 115 for the 29th of May expiration, because the volatility was super lucrative at these levels. We're trading almost at 100 vol, and we looked at the gamma profile. There was nothing above. On the technical, we were extended, and we sent the trade in the chat. But man, this move was insane.
We're at 126 or something, and I just yesterday or the day before or whatever, I was looking at there's like these like research firms that they do like short reports or whatnot, and I was looking at one fund or like one report, Citron. They put out about Sandisk SNDK back on end of March, like right before the war started, when Sandisk, I don't know where they were, like they were around oh man, they were around like 700, 750 or so.
600, something around 600.
Yeah, something like this. And they put out a short report like saying, okay, it has run too much, the memory story, it will switch once there's like overcapacity, or once the market will realize there's overcapacity, and some other stuff on the stock. But yeah, from there on, stock went up 100%, and we were talking about it back in the day. I was also like already looking at it. I had like a small trade short on it, but nothing major. And that was back then. The stock was, I don't know where it was, like 100 or something.
$70.
Yeah, and it was still looking like a vertical line up. And at this point, like first of all, you always have to, like when you short, do it with defined risk. because if you just go naked short, stuff can blow up, and it's the typical saying like the market can be crazy or stupid longer than you can stay solvent. So if you short something, especially like this volatile and this crazy moves, always do it with defined risk and not just go like short a call or short shares. But yeah, back then when it was 70 or 100 or something, it already looked like it went straight up, and I was like, okay, this has run too much. Time to pull back. It's a new stock, but this has time to breathe a little bit, and it did not, man. Like I lost the premium on the trade. It's not a big problem, but yeah, looking at it from 70 to 1,500 we're at right now or something. Should have just bought a call and and should have been done with that. But
you could have retired, man. Generational wealth here. Like it's absolutely insane. It's starting to look for me as a 1990 2000 bubble. If you remember back in, I think it was
I
last
don't remember. I
year.
wasn't born, bro.
No, I mean, no. I went, bro. I meant we talked about this back in. It's good.
Yeah, bro.
No, we talked about this Q4 2025, and you told me when do you think the bubble is gonna pop? And I told you it's not a bubble yet, because for it to be a bubble, we need to see rising prices with rising volatility. And now we are in that regime. If you look at it, VIX is basically holding 18, 17 as support, where usually it used to be 20 VIX or 17, 18 VIX. It's somewhat elevated vol. For now, it's the support on the market, and the market's going up. And sometimes you get days like today where you see VIX is up and the market's up, and then you have to look at the skew and see if it's the skew on the call side that's pushing the VIX up, or is it the entire term structure going up. So it's starting to look like the early dot-com bubble, where we see rising prices with the rising volatility. Plus, it is converging with my macro models that we are at the cycle top here. So
So
given where
you're
we
calling the
are,
top here? You're calling
I'm
this
not calling a
5,
top.
740, 750? That's
No,
the
no, no, no. It's not the top. I'm saying we are trading in a macro regime where we are at the cycle top. So we could stay in this regime for almost 5 years, man. Nobody knows. We could still trading the same dynamic, the same macro environment for 5 years, and we are still at the market, at the cycle top. So these things takes time to develop and manifest, but you have to understand it. Once you understand that you are on a trading from a macro perspective in a cycle top behavior, you start trimming your gains. You start being more tactical. And this is why I have been just buying derivatives, calls, upside calls, owning part of distribution instead of going with long shares. Because I don't want to own the entire distribution at these levels. I don't want it. And we talked about that.
that's the thing. Like when you have like this topping formation, the risk to reward is, or not topping formation, but this end cycle where you can like not a squeeze, but you can just rally insane, like do another 40% or whatever on whatever you're looking at. But the risk to give it a 50%, 80% crash, if you look at single names or whatnot, are so much higher than like you said, picking the right derivatives at the right time. In terms of like, of course, you're not gonna go onto Zandisk and buy like, I don't know, the at the money call or something, and pay an arm and a leg for the IV on it. But like at the right point, the right time, choosing the right derivatives, which gives you like the risk defined trade and gives you the right distribution to the upside. If we get a crazy rally, then you profit, and if it goes down, you're like, okay, I had my defined risk and I'm fine with that.
Yeah, exactly. So even you should try to look for cheap volatility in a market like this, and run some value trade like a multi-asset diagonal spreads or something. Because man, owning the market here, even just on technicals, where's the next support? Like if the market falls down on the daily chart, where's the next support? The previous all-time high. Where is the previous all-time high? It's 700. So there is $40 risk for the next support. You're absolutely cooked.
Yeah, this this is insane that this is on the index level, that the market just went straight up. Like away from the SPY, looking at the Qs is even crazier. And yeah, same thing applies here. If you look at the Qs, the next support is like another say 10% or maybe like 10-11% down, if you just look at it from the previous highs where we consolidated. So yeah, it's
So
looking
where are you
absolutely
going?
yeah.
Where are you going to put your stop loss then?
Yeah. So therefore
See,
have the defined risk trades, and then yeah, on the upside you have your convexity, which you can profit from. If it moves towards you, you profit even more. And then on the downside, you're good to go, because yeah.
it's a
But for
defined risk
this,
strategy.
yeah. But for this, you have to buy at the right like volatility levels or at the right prices in terms of how volatility is priced. Because if you buy a call or something that is pretty much only like the IV is the whole premium, you're gonna lose as soon as it starts to drop, like the implied volatility, even though your stock
Like
might move forward.
even like right now, I just looked at one of my quant models. I'm looking at it right now. On the SPY, we have been realizing about 10.47 vol, while the VIX is pricing almost 17 vol here. So there is a spread where the vol is actually rich. So if you buy at these vol levels, you are going to lose these 7 vol points. And if you can calculate it toward your Vega, you can identify how much you are going to lose just because of volatility is overpriced. It's
Yeah.
quite tough environment right now, man. And just by looking at it, SMH, SOX, X, AMD, bro, what's going on, man? Like I don't want to use bad words, but that shit is exploding at the rate of change that we see these moves taking place, man. It's absolutely insane. And
So I think AMD it's part of the shift towards the CPU storage, the CPU like story. That's why also Intel has been rallying so insane, apart from like a few other news. But I haven't read too much into it, but the general sentiment is that apart from Nvidia, who do like these GPUs, the graphic processing units or whatever, they now like shift towards CPU usage, which I believe AMD is a solid player, and especially Intel, which is like their kind of thing. And yeah, it's this shortage story. Like if there's a shortage in a commodity, because AMD and Intel and so on, they are like essentially a commodity producer, stuff can rally insane. If you look at like other commodity prices, once a shortage hits, stuff can double and triple in price easily, because at that point a shortage always like causes a crazy squeeze, and then like the psychology of not the people only, like but of the companies who are like, okay, we have to buy double the amount in order to be sure, because maybe next week the prices are going to be twice as high as they were last week, and therefore that's gonna artificially like drive up the price and whatnot.
So first thing, we got a comment. I will answer it. I will get to it in a couple of seconds. And to your point, T, so you are telling me that these people are front-running earnings because they have some new orders on their backlog book?
I mean, so
So this is what the market is seeing right now, basically? Because if people are going to buy more, which in the future, which means we are pulling future earnings for today, we are discounting it today.
Yeah, the earnings have been like crazy because yeah, it's the capex thing where okay, you have to invest everything now, and if you already expect, oh, this demand is going to stay, so we better invest double now and be ready, or like before the prices are going to go even higher. So I think a lot of it is like like this kind of front running. Yeah.
There is cost with capex because when, for example, for my company, when I buy new cars for our transportation company, the maintenance of these cars, which are our capex expenditure, is going to show up later in the balance sheet.
Yeah, of course. Like, you have to
So,
finance that stuff and so on, and it's gonna like be missing it in the future. So yeah, right now you have a
so
huge boom, but in the end, it's gonna cause some problems if there's no like if it's not a magical. Oh, we make so much more money that the capex cost or the we get so much more revenue that doesn't matter anymore. But at some point, yeah, it's gonna like come back. Like how do you say it? Like a whiplash where at the start you like whip it and then it makes this wave and at the end it's gonna hit you.
so this is what happened with Meta, right? They went cash flow negative, and the stock just got absolutely destroyed compared to the rest of the Mac 7.
I mean,
Because they
yeah,
are down today.
they're down today and like yeah, they got sold off on earnings and now they consolidated are down. Yeah. Oh, man. But
Crazy.
so we just got a question. Do you want to talk about it?
Iran seems unsolved. And okay, so there's a question from, there's a statement from Albert. He's saying Iran seems unresolved and it looks like it's not going to be. Petrol prices are up and the market is at all-time high. Okay, so we have now to explain why actually higher oil prices, why the market doesn't care about higher oil prices at
I
this stage
thought
of
you
the
were
market.
about to sound like Trump, like why higher oil prices are good for the US or some shit, man.
It's actually good for the US because they are a oil producer. So on the balance sheet, you have to buy oil from them, and then they're gonna sell you oil. And it's actually it's a double win for them because you have to buy also their dollars. So it's going to be a supporter for higher dollar, and there's more money that will get into the US. Plus, all the US shale companies are going to profit from it. It's
Yes.
bad for inflation, for the average consumer, and for his own election agenda to bring prices down. And this is what we see. Prices at the pump are still high, and with it, his popularity is going down. But
Yeah, bro, he was today at some interview speaking, and he said, "Oh, the Republicans they should not care about the midterms. They shouldn't care about it anymore." Like, man, either it's some of his shenanigans again, just yapping a lot and causing a lot of chaos and distraction to get some other shit done, or has gone crazy. But like, yeah,
it's this is his
no, but
strategy, bro. Like if you listen to
yeah.
him, you basically have to be very, very focused to filter out a couple very important points, and the rest is just yap to distract
Yeah,
you.
but I think
So moving, yeah,
regarding the question or the curiosity why markets are at all-time high even though oil is still like rallying and super elevated. So I think it's the market has kind of potentially moved on from it, which might not be a good thing. Like if you look at it, the inventories of like oil of like the strategic reserves or whatever, or also the company's inventories, they're gonna like they have huge draws, especially in Asia where there are the actual shortages. And if that doesn't get resolved, then the problem is going to be later. Like if you look at it economically or like from a macro perspective, like oil shocks or like these kind of shocks, they don't appear instantly. Like if you look at macroeconomic data like labor productivity growth or just in general employment data and whatnot, that stuff, it's not like oil spikes 50% and then the next quarter you're going to have an effect on that, but it takes like 4 quarters or even more for that stuff to even show up in the economy or like to have its effect. Like for example on like employment growth, I saw a couple of studies where they pointed out exactly that. They looked at the oil shocks or like oil price increases, especially at like the volatility in oil prices and how that affects the employment. And that effect, yeah, is delayed by like 4 quarters or so because it takes some time. So therefore, the market at the moment is like, oh, AI is going on, everything's happy, and ignoring it or like not pricing it in because it hasn't arrived yet. Like the shock for the say real economy, yes, there's uncertainty, which is not good for everybody, but it has not yet arrived. So therefore, the market is not woken up to it completely. Like usually, everybody says, "Oh, it's all priced in," but to be honest, it's not all priced in. Like things can change super quickly. Like if
It
at some
is
point,
actually. I
okay,
will
go
I will
ahead.
show it to you. It is actually. If you look at the rest of the sectors of the S&P, none
Mm.
of them broke all-time high. The XLP, XLU, XLI, XLB, we still below the war highs. And if you look
Mm-hmm.
at the RSP SPY spread, it's just a move back toward concentrated big caps because of the bear steepening that we see. Because the only survivor in a higher inflation regime, the only survivor in a higher interest rates regime is the big caps. And this is why we see this move back toward the big caps. And this
Mm-hmm.
is why you see the S&P is breaking new all-time highs because, man, the S&P 500 is skewed toward these big caps, the
Absolutely,
major
yeah.
weight. Yeah. And if you look at the RSP hasn't break its all-time high yet. It's still below the all-time highs before the Iran war. So it is a way to reallocate cash by money managers, while headline or on the index level, everything seems fine. But if you look beneath the surface, there is massive, massive, massive divergence taking place. Even within the AI names, there is massive divergence taking place. And that's because I said multiple times, liquidity is expanding. By the way, nobody knew that at the beginning of April, the RMP program by the Fed started that they talked about back in December 2025, where they are
Mm-hmm.
going to start to buy T-bills. So if you are asking yourself why Bitcoin has started its rally in April, it's because there is a major buyer in the market that's providing liquidity to risk assets, and that's the Fed. By doing that, who is going to profit from it? Again, the big caps. That money has to go somewhere. And if the macro environment doesn't support anything else but only big caps, the big
Mm-hmm.
caps gonna rally. And this is why when you see Nvidia is hitting new all-time high, Google is hitting new all-time high, and Apple hitting new all-time high, what's the S&P going to do? It's gonna hit new all-time high.
Yeah, because it's super obviously like completely
Exactly.
concentrated in those.
Yeah, it's overweight the big cap, while the equal weight S&P, the broad market, is still struggling. It's still below its all-time high. It's not looking weak, but it's not looking as strong as the S&P 500. This is why we talked about we are in a late cycle. This is a clear sign of a late stage economic cycle. Plus, you have a rising commodity prices, which is also a part of a late stage economic cycle. Because a lot of people think this rise in commodities is caused by growth. It's not. You know, when you are fully allocated as a money manager, and liquidity starts to drop, where are you going to reallocate your cash? In the laggards, right? And since 2023, commodities has been lagging. Since 2022, 2023, commodities has been lagging. And we started to see this rally in commodities even before the war started. The BCOM has started to rally, the Bloomberg Commodity Index started running even before the war, even before oil started pumping. It's because money manager or money portfolio managers reallocating cash from these big caps because of liquidity contraction. And now, because liquidity is back on the table, we see this cash moving back into the big caps while the BDC is still holding its highs.
And also, like, given this somewhat higher yield regime that we're getting, or like the like financing situation worsening, that is of course relatively good for the large companies that have huge cash flows, and that don't like solely rely on external financing. So therefore, yeah, you see this concentration towards the big liquid players away from the potentially more riskier ones, because they are also like fucked by higher financing costs.
You know when we're gonna turn in the cycle T? When the curve moves from a bear steepening into a bear flattening. Once that steepening is away and we start getting a flattening, this is the bond market telling you, hey, listen, growth is gonna start to deaccelerate at these levels or slowing down. And this is where you know it's gonna be over. This is where you know it's time to flip or exit the positions at the top. Since till then, we dance until the music stops.
Yeah.
And we have been trading in a bear steepener, man, like since the beginning of the year, basically. The curve has been steepening, but in a bearish way. And this is why you see TLT down. But here's one thing. You nailed it last week in the pod. You said 10-year above 4.5, it's time for another taco. And man, oh man, that was so good.
Well, bro, because you know where we're at right now? 4.4. We're already back.
Oh shit, man. It's time for another taco.
But yeah, it's who knows, man? Who knows what is going on?
Bro, MU Micron is up another 7% today, by the way. My God,
absolute
man.
Insanity.
Absolute insane. Okay, let's start with our opinions about market, and maybe we can do a short one today, not like last week. What do you think about copper, bro? I know we both are long copper. Man, that trade is paying out very well on the HG.
Yeah, it's inflation trade, like it's a commodity trade. It's like not necessary. It is, yes, of course, it's an industrial and growth metal, but also it is like a trade for the data center stuff. Like the copper is used in so much of these data centers. So it's going well, and based on the fundamentals, yeah.
I have been in a position, I think I told you about it, the copper gold value trade. So I'm long copper, I'm short gold tactically. Even though I want to be long gold, but for me, it's still not the right time to be long gold, because I think, to be honest, I am waiting for Warsh and his first meeting. After that, I will think about being long gold. Till then, I'm still playing it. Basically, I have a short call spread on GLD, and I am long the CPR, copper stocks or resources, etc. Now you can go long stocks. We are long Freeport McMoran FCX, and I am long the futures and long the ETF.
Yeah, you can play it various ways. Like FCX, yeah, was quite nice. Like it gave it a little bit of a pullback, like place to get in. But yeah, this is the thing. It's also like tactically. Like if you look at the CPR, the copper ETF, it's also like gap up, gap up, gap up, gap up. So it has had a crazy run again. So therefore, it's not like, oh, go balls deep long now, but tactically wait for the pullback, be ready for the right one, right time. And then at that time, like when everything's crashing, you just have to follow your plan, where it's like, okay, those are the things that I want to own. The question to ask is, did fundamentally anything change? Like, did really the world end? Or is this just short-term fear? And at that point, you just follow your plan and get into the positions where you want to be at a nice discount.
Yeah, this is why volatility exists. It's basically a transmission mechanism to take money from the weak and give it to the strong. That's it. And make sure if you are long copper, if you get long the ETF, either you take it via convexity and you don't care if you lose the premium, or if you are buying the shares, make sure to have access to futures so you can hedge yourself overnight in case of stress time. Okay, let's move further. What's your opinion about oil, bro?
It's just a gamble on geopolitics, man. Like at this point, it's the same thing. It doesn't look like anything's going to be resolved because it's the same thing. Trump says one thing, oh, they want to get out the nuclear dust with China together. Iran wants the stuff to get out. And then in like 5 minutes later, some Iran official is going to post, there's no proposal, no anything. So they're still negotiating and nothing materially has changed. So therefore, and like, yeah, nothing's open, no oil is flowing. So I think oil, it's not going to go down anytime soon. Yeah.
For me, to be honest, if I look at the chart, it seems to me that it looks bearish a little bit, man. It's looking, the way we are trading, this consolidation at the top, it's not looking as we are going to continue pushing higher. It's looking like, if you look at it, it's looking like October 2025, where we consolidated at the lows, and then we broke out higher. It seems like we are consolidating at the highs, and once we get resolution, we will get lower oil prices. And if you look at the calendar spread,
is that a conviction that you'd go short now?
No, I'm not calling a short. I'm just calling it's starting to look toppy, just from a price action behavior. And if you look at the calendar spread, basically the risk premium is leaving the contracts. It has been leaving the contracts like for almost now 1 month, and it's not that crazy anymore as it used to be once we started the war, if you remember. Like, we are not trading at $30 calendar spread on oil right now.
Yeah.
So let's move forward. So on the 10-year, your opinion is still the same, like 4.4. We're gonna see a taco.
I mean, before that, it moved like a day or so higher than that, but yeah, we shall see what Trump is going to do next.
Okay, so I think important for the 10-year is going to be the CPI report that we will get this week. CPI and PPI. If these numbers came in line, the market basically will not move. If they come above expectation, this is the market that's going to start pricing rate hikes, because we don't know what Warsh thinking about the Fed's going to be. And the market will think, why not starting to price a rate hikes, given that he is an inflation hawk. So this is why I said it's very important to see how the market will digest the first meeting of Warsh and how he's going to talk. The dollar, man, the dollar is still holding the Iran war lows, man. Like, any opinion?
But I think pretty much did not change a lot. As soon as we get resolution, the short dollar trade is going to continue. Like, yes, like you said, potentially people are like now more focused on maybe US oil, since it's like safer. You have like the issue of like your supply chain safety, that people realize now, oh, if the Middle East is not safe, so therefore we have to like maybe get it from the US. But I think that's just a small part of the whole like continuation of the short dollar trade.
Perfect. I have nothing to add. I think currencies are not trading right now based on interest rates differentials. I think we are trading based on exposure toward commodities. This is why we see the AUD is one of the strongest performer this year, and CAD and New Zealand dollar are still holding. And man, the BOJ, their intervention we talked about last week, basically short 160 again, people. That's it. What do you think about stock? No stocks. What do you think about Bitcoin?
Bro, I don't fucking know, man. Like, you have to sell me because Bitcoin, it's not a thing I'm into it too much. Yeah, like I trade it as a risk asset, I trade it as a liquidity asset, but maybe you can tell us something about it.
To be honest, man, I'm starting to review the thesis that we had at the beginning of April, like going long Bitcoin. Because
Because
on
of the
my
wash program.
exactly on my liquidity tracker, we have been moving up, and now for the last 3 days, it has been moving lower. So I'm evaluating that thesis. We will see. We will see. And one last thing, what do you think about stocks, bro?
To be honest, yesterday, the last time, we said like, all right, it's looking toppy here. We're not gonna go higher, but it still continued, and now we're at 740. Man, it's tough to say. But give me 1 second. I'll be right back.
All good, take your time. So for the people who are watching, still here, we are approaching gamma levels because this week is Apex. So I will, all good. This week it's May Apex, and it's very important to keep that in mind because the dealers are going to move the tape.
It's Friday,
So
this monthly expiry, this
exactly,
Friday.
yeah, May expiration. And on the SPY, I'm looking at it right now on the open interest profile. Man, there's the 740 and the 750 on the S&P 500, basically for the calls, and the puts is 725, the highest gamma.
So that should be the weekly range.
Exactly. So going into this week, today is Monday. You have Wednesday, you have Tuesday and Wednesday, where actually Vanna and Charm flows are the strongest and they hold support on market. Let me check it for you very quick because I have a model for these flows. Yeah, so Charm and Vanna are moving up. It's supporting the market. And after Wednesday, we should see some moves to the downside. Maybe not big moves, but choppy moves to the downside, like 0.5% or 0.25%. But overall, man, it's tough to short a concentrated market. Basically, like I got the feeling the big caps right now are the flight to safety trade, to be honest.
Yeah, that's what I was saying. Like if you get like a crisis situation or like a high yield, high uncertainty, whatever regime, then the big players who have deep pockets and who are not like on the brink of collapse every other week, they are flight to safety.
Yeah, man, the credit story, man, is not getting better, but
It's been quiet for a while.
Yeah, I had a question from a subscriber. He was asking me about the KIE short, if I still in it. And credit spreads, especially the triple C, have been moving down from 3.45. Now we are at 2.81. So we contracted again. This is why we see some support on the KIE. But man, these levels on credit spread are still very low historically. So nothing has changed, folks. Nothing has changed. It just takes time to play out.
Yeah, it's a long story one. And like if you just look at it, it shows some weakness against the rest of the market. Like just comparing the KIE against the broader market shows that there's no blue sky currently.
No. Like we still like below our entry price. So it's still looking good, but given the structure that you have call. If you have puts or put spread, you are losing via theta, using on time. So you have to add some call, sell some call spread, maybe the all-time highs, and neutralize your theta decay. Man, oh man, what a week! it's going to be another blockbuster week, bro. Like, we shall see. Before we close, there's one thing I want to talk about, a very important lesson from last week. Use the gamma walls as a hedge to front run your delta. Because man, that saved me on Intel, bro. That saved me on Intel. Like I had, let's talk a little bit about size so people can understand. I had 300 contracts short. So I received about $1.25 per contract. So I can do the math on it. And if I didn't hedge at 100, like basically I started hedging once we broke 100, man, I would be down $250,000 at least. And I walked out with a very small loss, like I lost 100% of the premium. It's not that bad. Basically, you're still in the green zone. So people, if you are dynamically delta hedging your position, use these gamma walls as an acceleration point to hedge the delta, to front run the delta, because once these walls breaks, you see such moves in Intel, for example. And then you will be sitting down and asking yourself, oh shit, man, I'm cooked. And
oh man, yeah.
But
the thing also, like, by the way, did you at now figure out why the delta did not fucking move once we moved higher? Because that was like maybe it has time. Maybe it has to do because it was still like so far out in terms of expire. It wasn't really too far.
It dropped, bro. Like we broke 110, 115. I was expecting the delta to step up because the spread has now a higher probability to expire in the money, which means day by day the delta is going up.
Yeah.
So I was thinking in my head, okay, once we break 115, which is the next gamma level, I'm gonna front run against delta by adding more than the delta is gonna change, so I can deliver the shares. And then on Friday, I was in the gym. You texted me, bro. Fuck, look at this. Look what happened. Apple Intel deal. I looked at it, and the delta just dropped. Like we're trading at 8 delta, we dropped to 6 delta.
Yeah.
And all of a sudden, this was the choke point for me where I made money on the trade on that day, because the value of the contracts didn't move as much as the value of the shares.
And you were actually at that point long, since the delta of your shares are higher than the delta of the spread.
Exactly.
So man, options are weird. Like maybe it's some option shenanigans where I remember back in the day when we shorted MSTR, like the stock pushed 30% and I was still up on the options because the vola was so like increasing so crazily. But yeah, options are weird.
But that was obvious, man. That was obvious.
Yeah, that was obvious. Yeah, I still couldn't figure out why.
Yeah, but now for Intel, like even I was looking at it, I was checking if the vol dropped, and that maybe caused the delta to drop given at the time because of the second order Greek that we always talk about, Vanna and Charm. And I looked at it, man, volatility for May contract shoot up 116 vol. And I was looking at it, and it didn't make sense. So this is why I decided to exit the trade. I didn't lose a lot of money. I went out. I survived it. I even managed to squeeze out some of my losses. So it's very important to stay disciplined in this game. Like try not to be emotional. Try not to marry the trade. If it doesn't work, you cut it short. Don't talk yourself into it, and you will survive for the next one.
That's actually an advantage. If you don't have a good thesis, then you can't marry the thesis.
Exactly. Oh, bro, this is a good one. This is a good one. This is also why George Soros, like if you read his work and if you watch his work, Soros and Druckenmiller always talk about once you see the opportunity, you go big, you go all in. And basically, if you think about it, we as like I am a very active trader. we do a lot of mistakes. I take a lot of crappy trades, bro. And this is one thing I have been trying to work on, just to reduce the volume of my trades and focus on these that really, really matters. Because if you think about it, 99% of your trades are garbage, and only maybe 1 or 2% are the money maker. So I'm just trying to focus on the money maker.
I mean, you take that's in the best case scenario, you only take the wet trades that make you money, but
it's not that easy, unfortunately,
not that
man.
easy. Oh well.
Before we close, one last thing. For June, I will be 2 weeks out. So if people ask themselves why there's nothing coming, I will be I was invited to talk in Qatar. So I will be holding a live webinar there. I have to be there, and we will be back after it.
Sounds like a plan.
Easy.
All
With
right.
that said, we'll see you next week, people. And
All right.
don't gabble too much.
Yeah, as always. Bye-bye.